Now let's talk more about the other currencies and have a look at the forex charts. As usually, we start with euro dollar. Probably a look at the weekly chart firstly. Here I'd like to underline that the levels of 105 once again acted as a good support for the euro dollar. And actually, we see that this candle last week almost engulfed the previous week's candle, which shows us that the euro does have some support. There are some positive factors for the European currency, and the level of 105, where we have the minimums of February, of March, and also of December 2016, is a really hard obstacle for the bears to break. So we are now once again focused on the euro between 106.15 and 105 levels. Last week, the euro was driven down by the strength of the US dollar. There was a big widening in the yield spread between the US and German 2-year yields to the biggest level since the beginning of 2000. Of course, political risks still persisted in the euro area and made investors less eager to hold the euro. Once again, as I have already said, the highlight of this week will be the meeting of the European Central Bank. The ECB is facing a really challenging task. It aims to encourage the euro area's economic growth with the help of low interest rates, without letting inflation out of control. Yet, the recent data showed that prices in the single currency area have climbed by 2% on the year-to-year basis, and this happened for the first time in over 4 years. That's pretty much taking into account the fact that the ECB targets inflation of just below 2%. And although we don't expect the regulator to change its policy, we will be watching whether the ECB President Mario Draghi explains higher inflation by volatility energy costs and says that it won't be sustained. If he does, this should be negative for the euro, should create negative pressure on the currency. But note that recent data from the euro area were rather good. There was decline in unemployment, there was increase in confidence, and Draghi is surely under pressure to explain further actions of the European Central Bank. We know that the regulator will start buying less bonds starting with April. We are speaking about quantitative easing of the European Central Bank. Its size of this program, which is negative for the euro, will decline since April, and the program is aimed to run until December 2017. So traders will be wondering what will happen after that term, and whether the European Central Bank will taper its policy somehow. So to illustrate the fact that the market expects slightly less dovish stance from the European Central Bank, I can just cite this information from Bloomberg, that the chance that the ECB will increase deposit rate by next April increased from 10%, which was last week, to 40% this week. So we can see how the market is becoming more bullish on the euro, how traders start to expect less dovishness from the European Central Bank and some movement towards normalization of its policy. Such expectations are positive for the euro. Support level is currently located around 105.60 ahead of 105, which is once again strong support, and the euro can test a 100-day moving average on the upside, which is located at 106.72. Currently the pair is trying to get above 106.15 mark. 107 is also a resistance. So, and 107.70, the highs of January 24th. So these are the levels we can expect on the upside, but surely Thursday will be a very volatile day, as Mario Draghi tends to move the markets a lot, and I expect that during his press conference we'll see spikes and the euro dollar will change direction a lot. Probably he will try to persuade the market that the recent spike in inflation was just temporary. This will make euro plunge, but some upgrade in the central bank's inflation forecasts may lift the single currency. So after a dip, I think that there are possibilities for buying of the euro dollar on the European Central Bank's meeting. Also note that this week there were some positive developments in the euro area's political situation. According to opinion polls, the independent candidate, centrist Emmanuel Macron is gaining votes and is gaining in popularity among French people, and this is a bullish thing for the euro as well. On the 4-hour chart, we can see that there is significant volatility. There are spikes to the upside and to the downside. For now, the euro managed to hold above 100 period moving average on the 4-hour chart, but trading will be very volatile between 106.50 and 105.60. So actually, if you don't have a bullish position now, probably levels around 105 would be more attractive for going long on the euro dollar, while levels above 106.50 will be more attractive for buying the euro, with targets around 107, 107.70 in case Mario Draghi sounds less dovish and in case US non-farm payrolls disappoint investors. On the other hand, some increase of the euro on the European Central Bank's meeting, if it happens, can also be temporary. So if you trade on Thursday and if you buy the euro dollar on Thursday, think about closing your positions before we get this release of the UN's non-farm payrolls, because this is the key and the last piece of the US economic data ahead of the Fed's meeting next week. So with all these events stuck up during the short periods of time, it's actually very complicated to hold long positions. We'll get, I think, some hints about the big trends of the currency markets for some months ahead. But until then, there will be more short-term action, and until these big trends are defined, we are currently trading on a very short-term basis.